Alright, so PRCH Group reported earnings, becoming my first 10-bagger stock, a stock that went up more than 10 times from the purchase price. Let's go over some of the key highlights in the presentation. Let's look at what the stock did, and let's do some predictions for the future. Just like I did many years ago in a video talking about in 2025 PRCH Group will do this. Well, look at the market cap now. We are at $1 billion. Where will it go from here? Well, stay tuned to find out my opinion on the matter. Alright, so let's take a look at share price before I show you some of the slides. We can see a massive spike here recently, even bigger if we look at the graph for this year. So if you look at your screen now, you can see that the stock was trading at $6 something, and then it just popped on earnings to above $10 a share. A massive gain for shareholders, and Matt Ehrlichman acknowledged us in the call as well, thanking us for our patience 2-3 times. So a lot of us have been very patient with this investment. It has not been easy. For example, I remember buying a bunch of shares at half a dollar here. You can see on screen in October of 2023. Bought before that slightly above a dollar, and then it dropped down, but business was still strong. We had these catastrophic weather events, which was very bad for us as investors. You can imagine looking at a big bet of yours going down by more than 50%. But then I was able to buy a lot more. I was able to wait. I was able to stay patient. Did not have paper hands. Nobody could rattle me out of this investment. Continued to hold, and look where we are today. I did some quick calculations on just the growth portfolio alone, the one I show from time to time here on YouTube, so subscribe for that. And if I were to rebalance the portfolio to one that would follow market returns roughly, I could get $2,000 something every month for the rest of my life, inflation adjusted, without running out of money ever. So very grateful to PRCH Group here for these amazing earnings and for the amount of wealth that this company has brought to its shareholders. What caused this massive spike in stock price? In my opinion, it's the removal of a lot of risk. As Matt mentioned early in the earnings calls, PRCH Group is no longer in the catastrophic weather event business. That's what caused the stock here to drop from $1 something to about half a dollar, which created a massive buying opportunity for me and many of you who have been subscribed to the channel for a long time. But this was a massive risk indeed. And then the business has come a long way managing the reciprocal exchange, spinning it off and creating a new shareholder structure. They talked a bit about this in the key updates. Q1 2025 demonstrates business structured to scale. So reciprocal here remains healthy. This is brand new. This is the first quarter where we have this new business structure in place. And this, I think, can confuse a lot of new shareholders who are doing analysis, looking at long-term trends, and all of a sudden they see big changes. Well, the business is very different now, and if you look at historical data, it will no longer be apples to apples, it will be apples to oranges. So very difficult to do proper analysis now if you're a new investor looking at this company. And then they talked a bit about where they stand in the market. They talked a bit about the resilience in a recession. Everybody needs homeowner insurance, and in the projections, the increased guidance, they have been baking in a recession basically, and tariff hits and all of that, but still guidance was increased. They did just an amazing quarter in terms of the finances and in terms of the guidance. So increasing guidance for revenue, increasing guidance for profitability, all of that is fantastic news for shareholders. And we could see interest from partners in doing business with them. They have onboarded quite a large growth team to be able to scale more. So it will be interesting to see where this goes. I think that the stock still has a lot of bull run left in it. In terms of margin, we can see that insurance is increasing, the cash, that they have a positive contribution here to EBITDA. We can see some other positive contributions, and then we can see corporate being negative one. Of course, you have the costs associated with that, and just getting a nice result as a result of that, basically. If we look at historical EPS, we can see that quite recently here we saw positive EPS for the latest 2 quarters, the second half here of 2024. Macro trend has not yet been updated with the most recent quarters, but this will be a third quarter here with good EPS. And we also saw positive cash flow from operations, substantial one, so very happy about that as a shareholder. And then we see that they have baked in zero growth basically in the software segment, with the housing market being what it's being. But we know that there's a lot of pent up demand there, and once rates come down, well, there's potential for even more bull run ahead in this case. So earnings strong, guidance higher. Biggest point from the earnings was that they have restructured and they are no longer as risky as they used to be in the past. And there's one thing I always say on this channel, and that is that investors absolutely hate risk. And with this big removal of risk, then the stock price had a huge bull run. All right, let's zoom out on stock price. As you can see here, for the 5-year period when it was listed here, it traded roughly at $10. I can do for the highest amount here. We can see that, all right, it looks like they're only up 2.76% since the beginning of the listing here. But this can be deceiving, so let's go over this with new shareholders, what's been going on. Because the amount of outstanding shares here, early 2020, was a lot lower than in 2021 here. They made some purchases, some acquisitions. So the company is a lot larger now due to more outstanding shares than it was in the past. Let's take a look at this in macro trends here. As I told you, 2020, you can see that the share count here is a lot lower. It's more easy to visualize if we go down here. PRCH Group annual shares outstanding in millions of shares. 31 million shares in 2019, 36 in 2020, and then in 2021, 94 million shares. Massive dilution due to acquisition. And then it has remained roughly stable, slow dilution due to executive compensation for directors, for the chairman himself, all of that. They have it listed. You can watch, for example, the Nasdaq website, and you can see the amount of shares that insiders have in total numbers. I think that some of the directors have 50,000 shares or something like that. Man, they should put me on the list. I'm also almost up there. Anyways, so you can see that there was a lot fewer shares outstanding in the past here. And then if we compare that to the graph of PRCH Group share price, we can see, all right, we saw a spike and then it came down. But now share price is roughly the same as in the beginning here. Only the amount of shares outstanding is a lot larger. So we're hitting a market cap now of $1 billion. Roughly the same revenue as, for example, Lemonade. Lemonade trading at 2 billion something with a lot worse profitability. We saw some negative growth almost, it didn't grow as quickly, but this is due to non-renewals in policy. This will continue. But we also saw that they're opening up to markets that they closed in the past due to this new structure, so it's poised for growth. It's going to be some very interesting quarters ahead. I'm not going to try to make any predictions in that area because it's too messy and too difficult, but I believe in this new structure, and so does the market, clearly. Let's speak about the market real quick. We saw a few analysts on the call making questions, but we didn't see any of the major investment houses, major institutions. Why is this? Well, market cap 1 billion. Warren Buffett, for example, won't even look at a company if it has less than $5 billion in market cap. And it's the same for many of the larger houses. There's not enough liquidity in a $1 billion company. It's too tiny. You can't cover it. Are you going to recommend it to your high net worth individuals, your high net worth clients, and tell them to put 100 million in? Well, that's 10% of the company right there. Who's going to be the sell side of that transaction? It can't be done. So as the company continues to grow, us early retail investors who have been able to ride this wave, we can continue to take advantage, and when the company is larger, there is potential for more institutional buy-in as the company gets bigger, and as market cap creates more liquidity, so more shares being issued. Perhaps the company decides to do a split of the shares so that one share becomes 10 shares or something like this, to create more liquidity. That's way down the line. The point with this is that this small market cap clearly indicates that there's a lot more bull run that could be had. So it's going to be interesting to follow PRCH Group along. As for my plans with this company, I won't sell a single share. I'm very happy with the performance that was reported in the earnings call. I like where the trend is going. It's still a small company, as we just reiterated, and all of these factors add up to where I think that the company is still an attractive investment even after this massive bull run. So no rebalancing from my end with regards to this company. Alright, that's been it for this video covering PRCH Group. And as always, hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.